Welcome to the Money Tree Real Estate Investor Podcast, where we learn from real estate professionals across the industry. They will share about how they got into real estate, the big wins they have celebrated, the mistakes they have made along the way, and the advice they have for anyone following in their footsteps. Money really does grow on trees. William Holland's here today, and I've got a special guest near Wittenberg, and I'll go ahead and let you introduce yourself and tell us a little bit about your story.
In 98, I was in Breckenridge from 94 to 98, moved out from Los Angeles to be a snowboard bum. But I have been in Denver since 98. So nearly 28 years here in Colorado. Came for the winters, stayed for the summers. And so when I moved to Denver, I went to a junior college here, learned about computers and computer networking. And so I went the certification route and got myself a job in the tech world. And that was nearly 21 years ago. So I've been in the tech industry for the last 20 years as engineer and architecting solutions for big companies. And so that's what I was doing. About 15 years into my career, I noticed that my 401k, which had $250,000 in it, I was thinking, wow, I'm now 40. I got to be here another 25 years. And for the last 15 years, all I have to show for it is $250,000 after really socking away a lot of money. And so I knew that that lifestyle was just not gonna work for me. So I'd always been interested in real estate, and my friend said, "Oh, you got to go to this local meetup. It's called the REIA, Real Estate Investors Associations, REIA, and typically every large city in the U.S. has one." So I went to the one here in Denver, Colorado. And all they talked about was fixing and flipping, right? And so I knew I wanted to get passive income through rent, but everyone said, "Oh no, you got to go into the flipping game so you can have money to go buy a rental." So the thinking there was very little, instead of just thinking big about commercials, instead of doing a single family home rental, doing apartments, more units under one roof, reducing the risk, right? So 13 years into my career, I was at the same company for about 13 years. Owner sold. I was somewhat of an entrepreneur in that company. 30th employee. And then when we got to about 100 employees, the owner sold to a Fortune 500. And I just knew the corporate world was not going to be for me as they started transitioning.
Right. Those are tough. That's tough.
Sucking the personality of the whole company out, right? So so I lasted 2 years, and I decided, okay, hey, I really want to jump into real estate full time. By then, I had already flipped 4 houses in the first year here in Denver when I first decided to get into real estate, right? And so with that advice that might not be correct for every investor, right? So I realized, wow, this is a business. This is not just investing. You're relying on partners because I'm not good on the fixing part of things. Mm-hmm. I got the good credit and I got the money to invest. But when you don't choose the right partners, it's a very risky business, and I'm not good at the fixing part. But what I did get good at was getting houses under contract. So I turned into a wholesaler. Awesome. And that's a high transition. Yeah. So that's a high transaction business. and spent about 3 years building up the systems to be able to handle that type of velocity. And 3 years in, this baby was ready to roll, and we rolled it out, and we did 10 deals in 1 month, and then
Wow.
yeah, COVID hit,
Okay.
and
Man.
transactions came to a stop. So it was good because so basically I had to suspend the wholesaling, the flipping business altogether. I had to go back to my W-2 this time last year. But the good thing is in 2021, I did pivot to multifamily. And in Omaha, Nebraska, where I'd been also flipping houses and wholesaling houses, similar market to Denver, but a lot less expensive, and at the time was a lot less competitive. So, um, so I knew Omaha really well. I loved the
Okay.
market. I had some good connections there. And in 2021, I used some of those skills I learned from wholesaling to get a 14 unit under contract, and then basically put that deal together between myself, the asset manager who lives in Omaha, Nebraska, and the investor who lives in Arizona. So we were really excited about that. And then a couple months later, found a 9 unit and went ahead, rinse, repeated that. And so now we're 23 units, 13 months later. And I just got some amazing information that basically between the 23 units, we had 60, uh, maybe $60,000 a door, and 13 months later, places right around it are being valued at 120,000 a door. So I think in equity, we basically made a huge jump, and you can see the power of investing in larger, properties. And typically that's done with multiple investors to reduce the risk, but then have that upside together.
Definitely, yeah, that's super cool, So with having a single family home, if the prices of the properties in the area increase, that house value is also going to increase. But as you mentioned, being able to scale, whether that's 9 units or 150 units, with each unit that increases in value, there's a multiplication factor there, and as you get bigger properties, that multiplication really helps out a lot in resale value for sure.
Yeah, and then that's when earlier in the year 2022, here in February, I joined a network of investors. As you know, we're in the same network, and that's how we know each other. But there's some heavy hitters in that group, and there's deals coming across. And it was just an eye opener for me. But the group is giving me the ability to scale, but also the ability to connect with vetted operators across asset classes, across geographical locations. And this country is on the move. It's migrating. It's migrating to the southeast coast. It's southwest, Midwest, south. So there's a lot of migration to those business friendly, freedom friendly states with COVID. It really is just really accelerated everything in every way, including real estate. So it's a great opportunity, as you've always heard, in times of change is the greatest opportunity to take advantage and really accelerate your wealth.
Exactly,
So
yeah.
yeah, so that's yeah.
That's very cool. So, you talked about so many different things. You talked about, moving from California, moving to Colorado. And we discussed beforehand, but I love to ski as well. And so that's so cool that, now you're able to invest in those same areas that you love so much. So you talked about investing in Colorado and also in Nebraska. What other markets do you think you will see yourself moving into in the near future?
Oh gosh, definitely the Texas Triangle. If you're familiar with that, you got the Houston, the Dallas, and the San Antonio, and then in between those, you got places like Waco, Plano, and Austin, of course. So love that. Phoenix is the fastest growing city in America, and so I like both of those markets because the reason why these markets are growing is because they're large enterprises are moving into those locations that I mentioned. Toyotas in Texas, Teslas in Texas. You got chip manufacturers going into just outside of Phoenix, which the government obviously is backing 100% with all these supply chain issues. So if you follow these large companies, they hire employees, and then we need to house those employees. So,
Definitely.
to see these markets, it's clear if you really step back and take a look at a macro, cycle of what's happening in that city. But I would also have to say climate change has a lot to do with people's migration as well. So countries on the move, and this is the best time to capitalize on that, especially
Yeah,
when it comes to real estate.
Passive investors in real estate are able to receive a check every month. Some people call that mailbox money. We say money really does grow on trees. Visit the website at biggerpictureholdings.com, where we have a ton of free resources to help you learn more about planting your very own money tree. Yeah, I agree. I'm super excited, and that's why I joined Race Masters as well. It's so important to be able to surround yourself with people, people that you can help encourage and share your knowledge with, and then people that are your peers that are kind of at the same phase in the process, and then also have people that are way ahead of you, that you can reach out to and have conversations with, and they can help you see, the mistakes that potentially you're vetted to make, or, it's like, hey, like, we can bring you in on a deal. Like that's what I've been doing. I found several great partners that are doing deals that have a lot of years of experience, and they've made a lot of mistakes along the way. And so if I partner with them, we can get past a lot of those mistakes without having to make them on future deals.
That's the beauty, is your investors, they can leverage your relationships. So, and your time. So that's I think valuable to the passive investor. And really the story I tell, and to most people, the demographic I usually talk to is tech professionals, because I've been in that world. I understand, like, wow, this 401k thing. And now I'm behind the black curtain, and I know I'm starting to see the world of alternative investments. And guess what? They're not that alternative anymore. They're moving to traditional real quick. So out of stocks into cash flowing assets, especially when you're talking about multifamily real estate, because those housing needs, they don't go away. Other asset classes is residential assisted living, or any sort of assisted living. We have 77 million baby boomers out there, and we're gonna need a place to house them, right? And these facilities are going to be world class, because we saw what happened in the assisted living world during COVID. So it's not only a great investment, but it's also a great, I guess, in terms of like helping people live out their golden years in a stress-free, nice environment, right? So Yeah, so there's a lot of different subclasses in assisted living, but that's another asset class. And with all this transition I've been talking about, storage, of course, people, that is a recession proof. That is a recession proof investment because people, when the economy's good, they're moving, right? So they need to store their stuff. When the economy is bad, they're staying put and need to store their stuff. So um, there's this is the beauty of being on the passive side and not having to go find these deals, not having to underwrite them, not having to put up at-risk money, not having to implement the business plan. And that's because you're a professional. You're either, once again, maybe you're exec level at a technology company, possibly IPO'd at that time, and there's these other channels of income that can be produced passively by just putting your money to work, especially in real estate.
Definitely, I completely agree. And a lot of the passive investors that I'm talking to right now, they have a lot of money sitting in the bank, and they don't know what to do with it. I personally have money in my 401k, and I literally lost thousands of dollars of value this year because of the all the turmoil with Ukraine, and all these things that were completely out of my control. And I think about all the people that are about to retire. And if you keep your money in the stock market, maybe in 10 or 15 years, you'll get back to where you are, and it'll grow again. But think about those people that need money now, like they're about to retire. They don't have time to get that value back. And real estate is such a cool thing because, like, even in the '08 financial crisis, the values of the properties may have taken a slight dip, but they recovered so much more quickly than the stock market did. So I've sold all of my stocks in my 401k, and I'm going to be looking to do a self-directed Roth IRA or a self-directed IRA, and be leveraging that to invest in real estate. And I'm not investing all of my money in real estate, but I think it's so wise for investors to take at least a portion of what they have, and go buy a real property and have real ownership in a real property. you know
Yeah, well, Wall Street's going to tell you to buy bonds, and the 10-year T bond is 2.5%. That is way below what we're seeing in inflation in this environment. And I know that it's saying around 8 or 9%, but for me personally, most of my money goes towards food and gas. So my inflation in my budget was closer to between 20 and 30%. So we need to be getting into investments that can be interest, right? So we need to be investments that we're getting above that 8 to 9 to 10% average annual return. And these alternative investments allow you to do that because what we're doing is doing direct to operator investing, right? So we have that personal relationship and there's no middleman, right? So, the Wall Street is mainly based on their fee base. That's how they make their money. So really what the return is, they really aren't interested in that. They just want to make sure that you're going through their brokerage, right?
Yeah,
For their
exactly. Yeah, and that's funny that you bring that up because one of my really good friends this week was, I've been sharing podcast videos. I post almost every single day. I took a 1 day break in the last 45 days from LinkedIn, and that was actually a really nice break to not have to post for a day. But I was talking to her, and she was asking me. She's like, "Hey, like, tell me more about this real estate thing. Like, my husband and I, we've been reading a lot of books. We've talked to a lot of people. We've heard a lot of success stories, like, but we don't know people doing things in real estate, and so it's like, hey, like, we want to invest with you, and we want to learn more, and we want to keep growing. And I was like so excited to hear that. But what she told me was her financial advisor staunchly was against them investing in real estate. And that's exactly what I said too. It's like, man, like, that's money that's going to be taken away from investing with him, so he's getting hit by that, and I think that shows you that potentially they don't have your best interest in mind. I've had family members, I've had friends, and if you're a small guy and with a financial advisor, they really don't care so much about how your portfolio is performing, because they're not getting much money for it. And so, like, I've met people that have lost a lot of money with financial advisors, and like, it's not the same way in real estate. Like, I'm gonna take care of everybody, and I'm gonna treat everybody the same way, whether you have $1 million invested with me or 25 or $50,000. Like, I want to see you grow. And the other thing that we do to align interests is we pay investors first. And if investors don't get a monthly dividend, like, we're not going to get paid either. So, like, it's all about, and the other thing is, the investors, they make 70% of the profits usually, so we have a lot smaller percentage.
Well, also, why would you take, and this is, to me, 6 years ago, why would I take advice from someone who doesn't even understand wealth strategies, because he's a broker and he's not a millionaire. He hasn't created the wealth because he or she doesn't even understand how wealth is created. But the 1%, the wealthy do. And like I said before, it's not like it's hidden, but you really have to go dig deeper. And most people are intimidated to do that. And I would just say that's where you and I come in to handhold them through the process, because now we've dug in deep, gone down the rabbit hole, and we know how these things work, and kind of try to convey this to our investors in a way where it's compelling, right? Like I said, no more alternative investment. Maybe I really just need to have a hard asset in my portfolio, and it just doesn't have to be cash flowing real estate. It could be oil and gas, cash flow real estate. Oil and gas is still huge. There's so many different cash flowing investments out there to bring you in that other stream of income. But I guess what I would say from my whole story, if I can go back and talk to myself 6 years ago, I would have said, Near, don't quit your job. Okay. And take that $250,000. Don't try to start a business with it, but invest it passively in syndications. And then eventually, after doing that, you can always transition into being an active investor, right? Once your once your passive cash flow either meets or exceeds your monthly needs, right, for both expenses and lifestyle. And so once you've reached that nut, then you have 24 hours in a day to do whatever you want. And if that's to be active, to even boost your wealth even faster, that's great. But maybe you want to travel, or maybe you want to start your own business, or maybe you want to be a philanthropist. So that's the beauty of financial freedom, is getting that cash flow, paying for all of your expenses and the lifestyle you want. Now, some of us want a more fulfilling lifestyle than others, or maybe have the abilities to really give their kids the privileges or the advantages that maybe they didn't have, and really pivoting the whole generation, the whole lineage of that family's financial status, now that they're
Exactly.
financially educated. And so
Yeah.
it is it's a real thing, and it's mind-blowing. And I got to tell you, it doesn't stop there. There's strategies the wealthy do that I am diving into now, such as infinite banking. And it's these vehicles that the wealthy are using to get wealthier and making sure that that wealth stays around for generations. So, yeah.
So tell me a little bit more about infinite banking. That's not something I'm super familiar with.
Well, yes, I might botch this because I'm fairly new to it, but basically you become your own bank by becoming an insurance company. All right. So say you have $100,000 to invest, you put it into this policy that that mutual funds they use to invest, and then there's insurance policy for your life benefits. Okay, so it's a whole life. It's called a permanent whole life
Mm.
investment. But basically, now you can take uh, you can take draws
Hmm.
from that 100,000 either as cash flow or to invest into a business. Okay, say you need $100,000 to invest in a real estate deal. Okay, you can do that, but the 100,000 doesn't actually leave your account, so you're making the 5 to 6% that the fund pays their investors, right? So that's the beautiful thing. You're using the money in two different places, and now you're
Mm.
getting maybe 15 to 20% returns on the money you pulled out. And everything in that system is tax free.
Yeah, that sounds
Mind
pretty
blowing,
incredible.
right?
Yeah, I've got a guy that's been telling me about the permanent life insurance policy, and I just haven't. I've looked into it a little bit, but haven't dove into it too deep yet. Just trying to focus on one thing at a time, And right now, it's just really getting a good foundation in real estate and making the right connections and listening to the right podcasts and reading the right books. But I definitely think that's a good long-term strategy that I'll have to be looking into pretty soon.
Yeah, it's a good place to, if you're going to save your money, it's a good savings vehicle because you can use the actual money, but at the same time, you can loan it out uh, to somebody else. So
Yeah, that's
I
really cool.
agree. I've been in real estate for quite a while now, and so I'm ready to diversify my portfolio in other wealth building strategies. Real estate is just one part of it, but it is the foundation to creating wealth. And just in the last couple of years, with over 30% appreciation, a lot of millionaires were made. I know teachers who are now millionaires, and
Hmm.
it's so cool to talk with them. You're a millionaire.
Yeah,
It's so
yeah, that's
cool.
awesome.
Yeah. So then they traded in and traded up. And the tax advantages around that, such as 1031s or um, bonus depreciation. There's just a lot of levers to pull. But realize you need a team to do that. Don't try to be an expert in everything. Uh, Dan Sullivan has a book called Who Not How. So that's the
Right.
one you want to
Great
read
book.
if you want to build a business. But other than that, do what you love, right? Or, grind it out for about 5 years and get your money multiplying.
Yeah, exactly. And you touched on, there's no right or wrong answer for why you want to, build your wealth, like why you want to gain enough passive income to be able to replace your daily job. It's like you can set money aside for your kids, or you can, travel more often, or you can go help, a charity organization, or you can do all those things. Or, I mean, if you're inclined, like you can, get a bigger house or a nicer car. Like there's really no right or wrong, but it's like just take that first step, to start getting the passive income. And I guess, that's one of the last questions I'd like to ask you today is, I know you're on the active side of things. So what kind of passive investments do you currently have?
Well, I am in the beginning of my journey here. So I do have those 23 units. So now it's time to get to the point where, usually where it makes sense for a capital raiser like myself to get us into a deal. And remember, these operators, we're vetting, right? And we might even fly out to see them, the team, fly out to see the property, just depending on the relationship. But we're only looking to work with 4 or 5 operators that can just rinse and repeat whatever asset class they're working in. So right now, to get that economics, typically I have to raise $500,000, about 500,000, to get into a deal where it makes sense for me to handhold my investors and be the investor relations guy, the guy they go to when they have a question or anything like that.
That's very cool.
Yeah, so that's kind of that's what I do on the active side. And those fees, how I make money is typically either those fees come from the GP side of things. And not only do I get those fees from the GP side, I take whatever fees I might get from that and I invest as an LP into that deal, because now I've vetted that deal. So I want to invest in that same deal. So that's what I'm doing. If your operator or your capital raiser is not investing their own money, it's something to be wary about. Now, there are special circumstances. Maybe they're building their business and they need that cash flow to continue building their investor list, so they can get that pool of capital that our investors have to really, get to where everyone wants to be as an investor, which you make money in your sleep as an investor. So It's a great position to be in.
Yeah, and all of the people that I talk to people that own their own apartments outright. I talk to people that are only passive investors. I talk to people that are active investors only, and I talk to people that are passive and active investors. But I think, through all those things, like if you're able to be an active investor, you definitely want to be a passive investor. But everybody wants to be a passive investor pretty much regardless. So I really appreciate just having this conversation today. I learned a lot. And I know the listeners for both of us are going to also gain some valuable insight as well.
Yeah, I really appreciate you having me on. I really also, I'm so happy for you and your journey, and that you're finding that early in life. Really proud of you and so happy for you. It took me 40 years to figure that stuff out. And that you're taking the step to actually get coaching and mentoring, which I didn't know was a thing, right? So you are going to succeed because you are partnering with people who have decades of experience, right? And if they don't like the deal, the bank doesn't like the deal, then, it's not a good deal. But there's a lot of eyes on $5 to $100 million deals that you can feel confident that people are putting their money into a vehicle that their money makes money for them.
Definitely. Yes, sir. Well, I appreciate the encouragement. And if I'm ever in Colorado around the winter time, I would love to go skiing with you. It's one of my favorite.
Yeah.
Honestly, that's literally my favorite thing to do is ski. So
yeah. And what part of Texas are you in?
I'm in Dallas.
Okay. Well, if I'm in Dallas for a conference, we'll have to meet up as well. So yeah, definitely come out.
Like and subscribe below. A new episode will air every Tuesday at 7 a.m. Are you looking for more content? Visit our website, biggerpictureholdings.com. And remember, money really does grow on trees.